Despite the failed oil talks of oil producers in Doha last night, following an initial sell-off, oil seems to be already resuming its uptrend. So let's focus on the 60-minute chart of Brent oil. As we can see, it has been in a correction for the last several days, and with the Doha news, or the failed Doha decision, we can see that we had quite a strong sell-off this morning. It's pretty impressive to see how well our corrective targets, our levels slightly below 41, served as support for this move. The price sell-off came into these support levels and is now bouncing back. We believe that this could create a bit of upside momentum, yet over the longer term, the whole move that we've seen since January, the whole correction up, may be slowly coming to an end. Let's look at the longer-term weekly chart. It is still in a downtrend, and we can see that despite the exaggerations, that means the envelope touching each other and our risk index being oversold, as well as our targets having been done, this downtrend has continued. We cannot exclude a retest over the next quarter. Looking at the daily or the perspective over the next few months, we can see that the whole move since January has held into its corrective targets. It has not been able to make it above these corrective targets, or above 45.73, or pretty much above 46. And that means that we need to consider this move since January as only a correction for now. And this correction is slowly coming into strong resistance. The hourly chart, or the perspective over the next few weeks, is still heading up. And at the moment, we believe that it could still resume its uptrend to reach its previous highs again, possibly a bit higher. Yet remember, the levels that we saw on the 60-minute, the levels below 41, would be a warning sign that this move is over. So if we look at the summary investor's view, we're still in a downtrend on the weekly, we're in a correction up on the daily in grey, and we're still trying to hold on to an impulsive up on the hourly. So we're still in a potential pullback in what is still a long-term downtrend. Equity markets this morning have been very similar. This is the mini S&P futures. We could see that we also saw a sell-off early this morning, and it didn't quite make it to corrective targets, and it's already resuming its uptrend. Put into the wider perspective of the weekly chart, or the perspective over the next few quarters, we believe we are still in a long-term consolidation, and that this long-term consolidation could possibly last another quarter or so. We've seen a very strong rebound, and we could also see prices coming into our smaller envelope here. So we're probably not very far from a short-term exaggeration. That means we'll probably retrace over the next few months. Looking at the daily, it's still all clear, we're still moving up, and possibly into the 2180s, which is pretty aggressive. Hence, we believe that at the moment, we must caveat this chart a bit, given what we just said on the weekly. We will hence focus on the hourly chart or the perspective over the next few weeks, and at the moment, we could see that our targets have pretty much been done. There's a bit more leeway towards the higher end of the 2080s, and we can see that the risk index probably has a bit more to go. But we're slowly getting there, so possibly over the next week or so, we could create what is at least an intermediate top. So at the moment, with a long-term consolidation still in place and two bulls over the daily and the hourly chart, we're in a potential pullback in what is a downtrend or consolidation. Looking at the euro, we can see that following the strong move in 2014, euro has stabilized, and although we have seen quite a nice price move since December, we're still in what is considered a long-term correction up. It could probably make it up slowly up to the 117 level over the next quarter or so, but the time for this correction is slowly coming towards an end. Let's go onto the daily chart to get more precision. We could also see here that the uptrend is still in place and that it could actually reach up to 117 over the next month or so. Yet, the risk index, which is in the middle of the range, does seem to be not moving up anymore. It could resume its downtrend. So we believe there's probably a bit more to go, but we wouldn't be too aggressive here either. On the hourly chart or the perspective over the next few weeks, we can see that we have consolidated over the last 10 days, and we slowly came into our correction down targets. As long as we stay above 111, the uptrend that we previously saw is still in place. We could also see that the support of this corrective zone has worked quite well, and we seem to be trying to resume the uptrend. We believe that we'll probably stay range-bound here over the next few weeks. So we're only in a correction up on the weekly chart. We have quite an aggressive feeling on the daily, and we believe that it's probably exaggerated. And the hourly has been consolidating and should continue to do so. We believe that we have reached the intermediate top in what is a very shallow, weak uptrend for now. It should last another month or so, but at some point we believe euro should resume its long-term downtrend. Looking at gold, gold has been in a long-term bearish trend since 2013, or 2012 even. It has corrected up recently. There's still a bit more to go, up to 1275, possibly up to 1400, but it is still considered a correction. So it is acting as a defensive asset for now. We can see that this move up is probably not over, still has a bit more to go, possibly another few months until end of May, possibly June, up to the high 1300s, possibly to 1350. The hourly has or had been in a correction down, and it's still, we cannot confirm that it's over yet. And we could still make it lower than 1200 over the next week or so. So, yet you see that the time allocated for this move is almost over, and we see a nice divergence here on the oscillator with a second bottom here, which is higher than the one we did about 2 weeks ago. It seems like the oscillator is turning up again. That could be a sign that the correction down on gold is over and that we could be resuming the uptrend for a move over the next few months to reach the targets that we saw on the weekly. So with two bulls and a bear, we're in a potential intermediate top and an uptrend. Thank you very much.